Hi everybody. In this video, I will discuss about the past year assessment question. You have this question. I have shared with you this question before. This question is assessment 1 or quiz that has been done many years ago. Okay, let's see how to answer the question that you see here. Okay, let's see. Section A. Indicate whether the statement is true or false. Okay, let's see. The first question or the first statement. Proprietorships are owned by one owner and provide only services to customers. So is it true or false? Let's see. Proprietorships are owned by one person. So this is correct. And the second thing in this statement is provide only services to customer. Okay, this is not correct because a proprietorship can do service business, merchandising business, and also can do manufacturing business. So the answer for this is false. Okay, and then the second statement. The second statement is financial accounting provides information to all business stakeholders, while the main focus for management or managerial accounting is to provide information to the management. Is it correct or false? Okay, let's see the first half of the statement. Financial accounting provide information to all business stakeholders. Okay, this is correct. Financial accounting, the main user is external users, but at the same time, it can be used by all business stakeholders. And the second half of the statement said, while the main focus for managerial accounting is to provide information to the management. This is also correct. Management accounting information is strictly for the internal user or the management. So this is true. Okay, the statement number 3, the principal financial statement of a proprietorship are the income statement, statement of honest equity, and the balance sheet. Okay, this is correct. Always remember, 3 main financial statement component for a proprietorship is are the income statement, statement of honest equity, and the balance sheet. Receiving a bill or otherwise being notified that an amount is owed is not recorded until the amount is paid. Okay, this one is correct or not? So this one is false because remember in accounting, always remember that in accounting you record revenue and expenses when they happen, or when you receive bill or invoice, not when you receive cash or pay cash. So always remember, you record revenue and expenses when you receive when it happened or it is done. Okay, this is false. The excess of expenses over revenues is called net income. Okay, this is supposed to be the other way around. The excess of revenue over expenses is called net income. So this is false. This statement explain about the calculation of net income. Net income in other words, it is called profit. So how to calculate profit? The true way to calculate profit is revenue minus expenses equal to profit. This is not correct. This is expenses over or minus revenue equal to profit. So it is false. Okay, so this is the section A. Let's see section B of the question. Okay. Section B of the question. Section B of the question says, match the following accounts to the financial statement where they can be found. There are two financial statement component written here, income statement and balance sheet. Always remember, an income statement supposed to show the performance of a business. It's supposed to show whether the business is making profit or loss. So how to calculate profit or loss in accounting? Revenue minus expenses. A balance sheet shows the financial condition of a business. It contains a list of assets, liabilities and equity. So if you do not remember about these two components of financial statement, you better check the lecture notes and see what you see the format for the income statement and balance sheet. Okay, so let's see the first one. Rental revenue. This item can be found in income statement or balance sheet. Okay, this item can be found in the income statement because it is a revenue, and you have to show revenue in the income statement. Supplies is an asset, so you will see supplies in the balance sheet. It is an asset. Account payable is a liability, so you will see account payable in income statement or balance sheet. The answer is the balance sheet. Account receivable is an asset, so you will see or you will find account receivable in the balance sheet. Wages expenses is an expense, so you will see the wages and the wages expense in the income statement. If you cannot understand if you cannot answer this question, then you better check the format for the income statement and balance sheet. We have discussed about the income statement and balance sheet in the lecture. Okay, let's see that. And then this past year question contains a C section. C section is a section that contains multiple choice questions. Okay, the question asks, the paper asks you to circle the correct answer. Let's see. The first one, which of the following is not typically true of or about the financial accounting information? Okay, let's see. The information is quantitative in nature. This is true. The information relates to future time period. I cannot say this one is true, because if you remember when we discuss about financial accounting, you know that financial accounting is related to history, because you when you do financial accounting work, you record something that had happened, so it is not related to the future. It is related to it relates to the history or past. Okay, let's see. The information relates to specific accounting entities. Okay, financial accounting is related to specific accounting entities, related to relates to specific business. The information is primarily financial in nature. Of course, this is correct, because when you do financial accounting, you record items that can be expressed in terms of dollar and cash only. So the answer is B. Okay, B. This statement is not true or is not correct about the financial accounting information. The financial accounting information is not relates to the future but relate to the past. Okay, see question number 2. Which of the following is the most correct definition of accounting? Definition of accounting. Okay, the question asks you about the definition of accounting. In the class I have, you know that the definition of accounting, the simple definition of accounting is like this. A process to analyze and record financial transactions and to record financial information. Okay, let's see which one is the answer. Okay, A, a system for providing quantitative info. B, an entity without profit objective. Okay, this one is not correct. Accounting is not an entity. Okay, so this is not correct. This one maybe it is correct because accounting is a system. C, the preservation of a systematic quantitative record of an activity. So it says accounting is only related to recording. So maybe this is not correct. Accounting is more than recording. The procedures and processes used by a company to analyze transaction and handle routine bookkeeping tasks. Okay, this says about process, but it says only related to bookkeeping. So I think the correct answer is A. Accounting is a system that provides quantitative information, financial in nature, about economic entities that is intended to be useful in making economic decisions. So my choice is A. The answer is A. Okay, let's see question number 3. Which of the following is not a function of accounting? Okay, first, accumulating economic info about organizations. I think this is correct. Measuring economic info about organization. I don't think so. Executing sales transaction for organization. No. Communicating economic information about organizations. Okay, this is correct. This is correct. The answer is this one. Accounting is not about executing sales. Accounting is not about doing sales, but it is more about recording and reporting. Okay, my answer is C. Number 4, which of the following is not a typical source of monetary resources for a business enterprise? Okay, this question requires you to think. Let's say you have a business. Which one of these is not a source of monetary resources or not a source of capital for you as a business? So investor is a source of fund or money. Creditors also a source of fund or money. Business earning also can be used to fund your business. But employees is not a source of monetary resources for a business. If you have a business, If you have a business, you cannot use your employees money to run the business? No. So the answer is D. You can use money from creditor, investor, and business earning, but you cannot use employees' money to run your business. Okay. Okay. So okay, let's see number 5. Number 5. The emphasis of financial accounting is on which of the following external users group? Okay, financial accounting. Always remember, financial accounting, the emphasis is on the external user. So which one is the external user? So always remember, financial accounting is done to provide information mainly to the investor and the creditors. You have a company, you have to prepare a financial statement that is useful for the investors and creditors. Investors, they want to make an investment decision to purchase shares or not to purchase shares. You have to provide information to them. Okay. Okay, number 6. The primary internal group that uses accounting information is, always remember, the primary internal user is the management. Management uses accounting information to make business decision. Okay, number 7. Number 7. Internal reports are generally used by management. Okay. Number 8. Number 8. The area of accounting that is concerned with providing information for external users is referred to financial accounting. If you see the external user somewhere in the question, always remember financial accounting is prepared or is done for the purpose of providing info to the external user. Okay, and then this is the next one. The next question is this one. Number 9. Question 9 asks you, which of the following is not one of the 3 primary financial statements? Okay, I think you still remember the 3 primary financial statement is the income statement, statement of equity, and the balance sheet. So the answer is A. Statement of cash flow is not the 3 primary financial statement. Okay. Okay, number 10. Which of the following financial statements reports a company resources, obligation, and owner's equity? So, which one? We talk about balance sheet, income statement, and statement of equity, or statement of retained earning, the same thing. So, which component of financial statement contains or shows the company resources, obligations, and owner's equity? So the answer is balance sheet. Okay, company's resources means assets, company's assets. Obligation means company's liabilities, the company's liabilities. Okay, let's see question number 11. Which of the following financial statement reports the excess of company's revenues over expenses? Okay, which one of these reports the company's revenue minus company's expenses? So the answer is the income statement. Income statement shows about revenue minus expenses. Okay, number 12. Okay, number 12. Which of the following financial statement reports the amount of cash collected and paid out by a company. So, okay, this one you have to remember. Statement of cash flows. The answer is statement of cash flows. Statement of cash flows shows type of cash or amount of cash that go into a business, and also shows the type and amount of cash that go out from the business. Okay, so the answer is statement of cash flow. And then, okay, question number 13. Number 13 is easy. Okay, question number 13. You have to know how to answer. You should know the answer for this question. Which of the following is not an external user of financial information? External user means people outside a business. Internal user means people inside a business. So which of the following is not an external user? Competitors is an external user. Employees, so employees is internal user or external user? Okay, let's see the next one. Management is internal. This one is external. This one is questionable. This one is internal. And the answer for D, supplier. Supplier is external. Okay, now the answer is supposed to be so which of the following is not an external user? So employees or management? The answer is management. Employees and an employee or one person or one worker is most of the time considered as an internal user. But when they are a group of employees, like a labor union, most of the time they are considered as an external. A labor union is always considered or seen as external user. Okay, remember that. Management is always an internal user. So the answer for this is C. So let's say question number 14. Number 14. Okay. The financial statement that reports resources owned, the obligation to transfer resources to other organizations, and the claim by the entity's owners is known as the this one, the answer is the balance sheet. Resources owned, assets. Obligations means liabilities. And claim by the entity's owners is equities. So these three things you can see them in the balance sheet. Okay, and then question number 15. Select the type of business that is most likely to obtain large amount of resources by issuing stock. Okay, there are many type of businesses. You have, you know, there are at least 3 type of businesses: sole proprietorship, partnership, and corporation or companies or company. So, which one of the 3 is most likely to obtain large amount of resources by issuing stock or shares? The US term. The term that they use in US is stock, but here and many other countries we use the term shares. So which one of these is most likely to obtain large amount of resources by issuing shares? So the answer is the B, corporation or companies. If you start a company, you can obtain large amount of resources by issuing shares or selling shares to the public. Okay, the last question is a short essay question. The question says, there is a statement here. The historical cost convention looks backward, but going concern convention looks forward. Do you agree with the above statement? Give comments to support your answer. So, what do you think? These two things are related to the accounting principles. Before this, you have learned about several accounting principles. One of the principles that that we have discussed is the historical cost. Historical cost principle says that in accounting, you record something. You record the value of an asset at the purchase price, or in other words, you record the thing that had happened. Okay. But going concern, another principle is going concern. The going concern principle says something like this. When doing the recording process, you have to assume that a business will continue to operate in the future. So, do you agree that the above statement, do you agree with the above statement? The historical cost convention looks backward, but going concern convention looks forward. I think the answer is you're supposed to say yes. Okay. Why historical cost convention looks backward? Because the historical cost convention or principle says you only can record the value of an asset at the purchase price, at the price or at related to the things that had happened in the past. So it looks backward. But going concern convention or principle says when you want to do the recording process, you have to assume that a business can continue to operate in the future. So it looks forward, looks to the future. So I think the answer is you should say that you agree with the above statement, and your comments should say that historical cost is says you have to record what had happened, and the going concern principle says you should assume something about the about what will happen to a business in the future. Okay, thank you very much. You can communicate with me in the comment section.